Bitcoin is pretty theoretical, it's pretty intangible, and it's pretty hard to understand because so many of its concepts are brand new. So somebody coming into this space and beginning to learn about it, it's very hard to grasp it and begin to put it into a box of understanding. Of course, you're never going to maybe understand all of it, but the information we're going to look at today with the Block Explorer should help you figure out some very tangible ideas and concepts around Bitcoin. A Block Explorer is an app that is built on top of a Bitcoin node, and it creates a more visually understandable and pleasing way to look at the blockchain. It's going to show you all of the previous blocks. It's going to show you the mempool, which is the waiting room for new transactions that are wanting to be put into a block. It's going to create estimations of the mining hash rate and estimated times of next difficulty adjustments and Bitcoin halvings. And you can look through this public transparent ledger that is the Bitcoin blockchain and begin to understand it more so than you might without something like this. My name is Forrest Hodel. I'm a Bitcoin educator, and I actually do one-on-one coaching sessions for anybody looking to up their best practices for their security or any other thing that they might have questions around with Bitcoin. So you can check that out. There's a link in the description, pathtobitcoin.xyz, and you can book a session with me. We're going to be looking at a couple different block explorers, and the first two are public. So this is mempool.space. You just go to that in your browser, and this is the Mempool Block Explorer. Now it's kind of confusing because it's called Mempool, but there's also a mempool within it. And this here on the left, these green blocks here are the mempool, but this block explorer is also called Mempool. Slightly confusing. So essentially mempool.space is hosting a node, and they are running this open source software called Mempool on top of their own node, and you can go and visit this. So you can see here, we are at block height 926,881. This is the most recent block, and you can find a lot of information if you just click on the block itself. You can see when it was mined. You can see how much fees, total fees, the median fee, how much average fee people were spending, the subsidy and fees. So this is the new generation of Bitcoin. 3.125 Bitcoin are being created and added from the Coinbase and given to the miner. The miner in this case is Spider Pool. It's a pool of miners. And they only got 0.002 Bitcoin through fees, which is added to the total here. So you can actually take a look at the block, and you can see a lot of these dark green ones, or all of the dark green ones in this case, are sub 1 sat per vbyte, which some mempools have the ability to see that and not. We'll get into that further as we look into the other mempools that are out there. And you can actually hit these goggle button, and you can begin to look for specific transactions. Now, so basically these goggles are sort of like filter goggles where you can see transactions that represent this type of information. So whether a transaction has RBF enabled, what kind of address type it is. So right now, most people are using the SegWit address right here, but there's older addresses as well. So P2PK is pay to private key. This was the original address type. We have taproot addresses and so on. So if you click that, and then you click the goggles off, you can see there's actually no P2PK, but if we look at older blocks, we're going to see some of that. We can see if there's op return information in some of these blocks, if some of them are fake pub keys, and this is, you kind of got to do one of these at a time unless you're looking for transactions that have all of those, and whether some of these are inscriptions or not. So it looks like there's some op return here, so we can take a look. There's an op return in this big consolidation. So this is the other thing, right? Once you click a transaction that's in the block, this block is full of transactions. You can see there's a little bit of information they pull on it. They say that it is SegWit. It does not have a taproot address. It has replaced by fee. It was expected in block. There can also be ones that were not seen. So it's out of band transactions that were direct to miner. So the mempool, the broad consensus mempool of the network, did not see the transaction, but it was added to the block because it was mined by the pool or the miner themselves. And everybody else had to download that freshly because they hadn't had it in their mempool prior to that. So we can see this transaction has an op return right here, and it is a runestone, whatever that is. It's some kind of spam type transaction, ordinal type BRC20 thing. I really don't really know that much about it, but I can see that there's no value in that. Now, we can also see this is a consolidation. So this here is the flow chart of a transaction. So you can see each one of these, you can look on the flow chart, you could look and see each one of these transactions here is a certain amount of Bitcoin. You can see the address it came from. This is 0.0000294 Bitcoin. So really, really small amounts of Bitcoin. And they were all combined. There was one, well, actually, no, there's tons of transactions. So tons and tons and tons of transactions. There was 651 outputs that are just put into this as well. And you can see that there's essentially only a few outputs, only 3 outputs. So one of them is this op return, which is just a certain amount of data in a certain field of a transaction. You can see this output 2 is a massive consolidation compared to the amount, because there's tons of really small transactions in here. So this is the large transaction. And then there's one more transaction here as well, which is this one here, which is just a smaller, it's so small it's hard to even put my mouse on it, of just basically 2 of these combined into one output. Not sure why, but then there's also this, which is the fee. So this transaction paid $7.48 in fees, or 8,185 sats, to get this all of these transactions and consolidate them into one new transaction. This block here actually has a certain amount of limited space. So each one of these represents how much space they take up within the block. And these large ones, if you hover over them, a lot of them are going to be consolidations. So they're going to be a lot of transactions going into a few new transactions, or there are going to be a lot of UTXOs, or unspent transaction outputs, which are essentially chunks of Bitcoin, and they're going to be combining all of those and sending them all in one transaction to one new address. And that is what a consolidation is. And there's sort of reasons for that. If we looked at that one that we just saw, it's 294 sats in those transactions. You can spend basically to send one transaction at 1 sat per VByte, you might be spending 110 sats. So a third of that UTXO is going to be eaten up in fees. So that's why somebody would maybe want to consolidate a bunch of those into one new chunk of UTXO, where if you send that to somebody, or use it in some way, the percentage that the fees make up in its value is way lower than 1/3 or 30% of the UTXO's value is eaten up, right? So it's not about the amount of Bitcoin that is being used. It's actually the amount of data that you are sending and the space that it takes up within a block, and the demand for block space. So right now there is almost zero demand for block space, or very, very little demand for block space. But we actually have something interesting happening here, where you can see the next block, people are willing to pay 3 sats per VByte. And the reason for that is it's been 39 minutes since a block has been created. So usually it happens on an average of 10 minutes, or actually a little bit less than 10 minutes, because hash rate is increasing over time. So when this happens, when there's a little bit of a delay, and it's just on averages, so we just saw the block hit right there. Now we have a new block. But there was 40 minutes in between a block. So people that want to get a transaction through, they're going to start paying more because they've been waiting so long, and they want to make sure that they are in the next block. So now, if we have a few hit in a row again really quickly, people will be paying less. So the fee estimation is sort of built on how much demand there is for block space, which is dictated by usage on chain, and also how much hash rate or the difficulty adjustment, or basically how on average the blocks are hitting. So right now, there's actually been a decline in the amount of hash rate on the network. So you can see the next difficulty adjustment, it's actually going to make the mining a block less difficult by 1.25%. And that is built and estimated on the fact that it's taken longer than 10 minutes to mine a block. If this was 9 minutes or 9 minutes and 30 seconds or something like that, the difficulty adjustment would be going up in 3 days instead of going down. So the mining difficulty adjustment is always built off of the amount of time, and the network is aiming, and it sort of has it programmatically built in to get 10-minute average blocks. This is basically the fee estimation panel that you would take a look at. You would say, okay, well, if I have a high priority transaction, I could have 1 sat per vbyte, which basically for based on an average native SegWit transaction of 140 vbytes, it's going to cost you 13 cents to do that transaction. And again, it's about the data space, not about the Bitcoin amount. So you could have 1,000 Bitcoin in one Bitcoin address, and you could be sending millions of dollars of value, but it would still only cost you 13 cents. But if you had that 1,000 Bitcoin built in a bunch of different UTXOs and you were sending it all, then you would be paying more block fees. Of course, at that level, you're not really going to care that much about how much it costs because you have 1,000 Bitcoin. So medium priority, if you have the software to enable it, if your software is compatible with under 1 sat per vbyte, you can begin to lower the amount that you'd be willing to pay based on how much you care about being included in the next block or not. You can see also in these blocks, there's additional information. So the amount of transactions, there's 3,020 transactions in this block. There's 4,500 transactions waiting in the mempool in this block, and many other thousands or hundreds waiting in these blocks as well. There's actually 15 more blocks, all with sub 1 sat, big consolidations mostly. If we take a look at these really large consolidations, paying very, very little amount and just waiting until the block space is available for that. So you can see some more information. We just clicked on this newest block here, and you can go down and you can see the Coinbase. This is newly generated coins coming out of the 21 million max supply. There's a little bit of data that the pools and miners can add to the Coinbase transactions. So they put their mining information in there. You can also see transactions that have a 2 of 2 multi, or any sort of multi-sig. Multi-sig transactions are unique in the way they're built, so Mempool is able to track those and recognize them for what they are. You can individually go through all of these, and you could hit this back button as well on a transaction, and you could begin to actually follow a transaction back. The way it sort of works is a UTXO, when it is sent, is sort of destroyed and a new one is created in its place for the amount of value. So you're not able to necessarily follow, you're able to follow Bitcoin back to its Coinbase, but it's going to be different UTXOs each time. So right here, there's basically an even amount of split. So it's dependent on which chunk of this you want to keep following back, but you can keep pressing these arrows, keep following it back. You know, we have 0.5 Bitcoin that this was in. We're going to continue to go back, and you can see we're actually going further back in time. So we're at 926,652, and we're just going to continue following the biggest chunk of UTXO back. So 900, 2,000. Yeah, so now we're even further back. This chunk of Bitcoin continues to be moved around a lot. So this was 40 hours ago. Yeah, so we moved one transaction back. So for some reason, this UTXO is being moved almost every block. So it's not moving that. We're not moving that quickly back through the blockchain, but you can manually do that if that's something that you wanted to do. So you can see here, there's some blocks that have very few transactions. And so this one is empty because you'll actually see that it is not including sub 1 sat per vbyte transactions. So all of these transactions were expected by Mempool's mempool because they put them in here and said, hey, these are valid transactions. Yeah, they're paying less than 1 sat per vbyte, but you could include them in your block, or a miner could include them in their block. They're the most likely to be mined in based on our template or our mempool policy. But F2 pool does not mine sub 1 sat per vbyte transactions. So all of this is empty, and there's reasons to do that, or there's reasons not to do it. But you can see that some pools do that and some pools don't. So let's take a quick look at a couple really interesting transactions or a couple interesting blocks, and we'll go from there. So let's go to the first one. This is known as the Genesis block, and you can see this was 17 years ago. There's one transaction, and that transaction is the newly generated coins. There's no actual sending from one address to another, and you can see that was received to a pay to public key address, which has a different type of address type, and these are not quantum resistant, not as private, and don't have the functionality of a SegWit address and so on. And it was 50 Bitcoin. So every roughly 4 years or 210,000 blocks, the amount of Bitcoin being issued in the Coinbase transaction gets cut in half. So first it was 50, then 25, then 12.5, and so on until today, which is 3.125. And you can see just as the mining pool added in some arbitrary information into the Coinbase transaction, Satoshi added in this information right here, which says the Times 03 January 2009, Chancellor on the brink of second bailout for banks. Now, what's interesting about this is this serves multiple functions. The fact that this was mined on January 3rd, 2009 means that there are no coins before this, right? This dates this in a real world sense because this is the headline of a newspaper that came out that exact day. If we just search this really quickly, we can see this is the headline in reference to the UK Chancellor Alistair Darling's decision to inject £37 billion into the British banks to maintain credit liquidity during the aftermath of the 2007-2008 financial crisis. So this dates the Genesis block to make sure that there isn't any pre-mine of Bitcoin. This also brings reference to what Bitcoin was essentially created to destroy, which is the fiat system that has no accountability, no transparency, and a lot of central control, and has socialized losses and privatized gains. So this is a picture of the front here. It also has, an interesting piece there. Israel prepares to send tanks and troops into Gaza. This was 17 years ago. We're still seeing, relatively similar things there. There's also, eat out for £5, which is probably very hard to do at this point. 99 pence for a beer. Very, very interesting information for, just happenstance that Satoshi picked the perfect paper in my mind for this information in this Coinbase here. So let's go to 170 block height, and we can see the first transaction, the first use of Bitcoin peer-to-peer. And we can see that this block, you can see all the ones before it still have only one transaction. This is the first one with two transactions. This is Satoshi testing the network by sending 10 Bitcoin to Hal Finney. And so we have the Coinbase transaction, just as the other one, no information put in the Coinbase, and we can see that from this wallet, 10 Bitcoin was sent to this address, and this is the change address that the 40 Bitcoin change was sent back to. So this is the first Bitcoin transaction on chain. So let's go to block height 57,043 for another interesting transaction. This is Laszlo's famous Pizza Day transaction. This is somebody, I believe in Finland, buying 2 Papa John's pizzas and sending them to the home address of Laszlo, and Laszlo sending that person 10,000 Bitcoin in exchange for that. This was the first recorded transaction of Bitcoin being used for a real world good, and it was 2 Papa John's pies. And this gave a real world price to Bitcoin in some sense. This was, you divide the cost of those pizza pies by 10,000 Bitcoin and you have a relative value for Bitcoin. Otherwise, people were just sort of valuing Bitcoin based on the cost of electricity and mining, which was, always dependent on all sorts of different variables. This kind of gave it a first real world use case in this sense. So this was almost like a consolidation. Laszlo had a huge amount of addresses here that he sent to one address here, which is 10,000 Bitcoin. And again, you could follow this amount if you decide to, follow the largest chunk. You can continue to follow it until it stops, and there's actually just a wallet holding a large amount. And again, it's sort of breaking up. You kind of have to decide which one you want to follow. But this address here has 49,000 Bitcoin. And we're moving up into the future here as we go along. So let's go to the main dashboard here and we can take a look at some more information. If we go to the mining button here, we will actually see what pools are on average mining blocks and what miners are doing that. We can see the hash rate, and all of this is derived by actually how long it takes for a block to come in on average. And this is estimated off of that information, since there's no ability to account for the actual hash rate. It's just averaged and estimated based on the average block that's coming in. We can see some information like 456 blocks until the next difficulty adjustment. The estimated amount of blocks, which is 123,096 blocks until the next halving, which happens in 2028. And we can take a look at the hash rate. This is the difficulty level here in purple, and we can see it's been coming down a little bit. The hash rate moving average over time. So this is that line here, and it smooths out some of the volatility day to day with the hash rate. And we can see there's been a slight decline. Hash rate and price kind of move together because some miners will have to shut down if it is not profitable for them to mine anymore. So when the exchange rate of Bitcoin, say to the US dollar, goes down, those miners might become unprofitable and they can simply shut off their machines, reducing the amount of hash rate. And when they reduce that, it takes longer for the average block to come in, and then the difficulty will go down because of that. And then it might become more profitable for a miner to turn back on. Now, what's really interesting here is we are just at around 886 exahash of hash rate. And what's interesting is if we go all, we can see this crazy parabolic rise in hash rate and electricity and compute that is going behind the Bitcoin network. This little drop here is in 2001. Was catastrophic seeming at the time, but this was the China mining ban, and obviously we have recovered and gone way, way higher. Now what's interesting is if we go back, we go from zettahash to exahash all the way to right here. We start to get into petahash and terahash. And if we go to right about, let's see, oh, and then gigahash underneath that, let's just find, let's see, there's a massive jump up there. There we go. If we go to basically May of 2011, 1.16 terahash, 1.16 terahash of hash rate behind the entire Bitcoin network in 2011. That's 2 years after Bitcoin was first started. This thing right here, this tiny little home miner that has the average ability to hit a block is something like 17,000 years. This produces the same amount of hash rate as that was behind the entire network in 2011. Which is pretty crazy how far we've come. So compute has gone a long way, and obviously the price of Bitcoin has gone way up, making it more affordable to put electricity and operations and infrastructure and everything behind the idea of mining Bitcoin as a profitable business. We can also hit this tab up here, this little lightning bolt, and we can take a look at the Lightning Network, which is a layer 2 on top of Bitcoin. And right here we have this graph that excludes Tor nodes, but it's Lightning node channels around the world with their estimated location. And we can kind of see this is a hub and spoke type of network model that has these hubs that route payments through them so that you don't have to have a channel open with the exact person you want to pay. But if they're on the Lightning network connected to enough nodes, then you will be able to send it to them and route it through other nodes. So it sort of bounces along, and there's some routing fees to pay, and it ends up landing at the person that you're wanting to pay. We can see the total capacity on the Lightning Network is 5,349 Bitcoin. So really not that much. And a lot of about a ton of payments goes through the Lightning Network because it's that same Bitcoin moving back and forth and actually only settling occasionally on chain when those channels close. So there's 42,000 channels and 5,000 Bitcoin amongst those entire channels. And we can see some metrics about the history of nodes and the capacity and so on. So, and these are some of the biggest Lightning channels that you can connect to. You can also, if you run a Lightning channel, I actually don't have one running right now, but I did, and you can actually go to it. So you can look up your alias that you have for your Lightning channel. And this was on Tor, and it was called Sats Arcade. And I could see the capacity, I could see the channels, and I could see the amount of Bitcoin that was on there at when it was operating. And now it is just not, it's just not running anymore. I haven't had it running for quite a while, but this would be a way for you to see also the peers that it's connected to. So Bitcoin Well is an exchange that I like. So if we look at that, we can actually look at one of their Lightning nodes. They have 44 channels open. They have about 7.3 Bitcoin on in their channels. Their channels have gone up, their capacity's gone up, and they are connected to all sorts of different channels here. These are their open channel. They have open channels with these other Lightning nodes, and so they can route through there to any other wallets that people might have. If you click this documentation icon here, you can find out a lot of information. Any questions you might have are going to be answered in here. You can also hit this I, and it'll tell you more about the open source project that is Mempool and who funded it, and so on. So you can you could actually go to the GitHub of this, download the code base, run it on top of your Bitcoin node, or you could use something like Umbrel, which is what I have running right now. On this server, I'm running an implementation of Bitcoin Knots, and I'm running Mempool on top of that. And if you click that, it's actually going to bring me to this tab here, which is my own instance of Mempool. And you can see the mempool itself on this block explorer looks much different. So if we actually compare them, we can see here, we'll go to mempool.space. You can see this next block has 5,029 transactions in it. My next block only has 1,600. And that's because my Bitcoin Knots node is actually filtering out a lot of transactions in my mempool through the mempool policy section of the node. The configuration of it is basically taking in all the information from the network and rejecting certain transactions based on different parameters, whether they have an op return or not. So if I click in here and actually take a look at this block, use my goggles, this is on my own node, right, my Knots node, and hit op return, it's showing some op returns, but that's because it's showing ones that are below 42 bytes. So it's only ones that fit within the parameters of my mempool policy right here. So it's showing a lot less transactions. However, on the right-hand side, it will show the exact same block. So 5,214 transactions in this latest block here. If we go back, it's the same amount because the blockchain needs to be exactly the same so that we're all in consensus. So we all agree upon the ledger of Bitcoin, but the mempool can be different. And that doesn't have necessarily a negative or positive effect. There's arguments for the ability to filter. This is sort of the core versus knots sort of debate that we don't necessarily need to get into today. But essentially, everybody's mempool is going to look slightly different. Another example of that is mempool.guide, another open source, just basically, it's mempool.space, but it is a different node behind the visualizer of the block template with some slight adjustments to it. So again, you can see this node does have sub 1 sat V bytes, like it looks different than mine, but it also looks different than mempool.spaces. So they have some sort of filtering in there that is changing it. So only 1,900 transactions, when again, this one has 4,500 transactions in the next block. So it looks slightly different. This one also has information about different node implementations, how many are on, how many Knots nodes are on Bitcoin are on Tor versus ClearNet, and how much Ocean mining hash rate is on Datum or just straight up through Ocean. So there's some additional information here, and this is a favorite of Knots runners, I would say. So these are both services that are available to the public, and you can look through them and figure out the difference, figure out which one you prefer, and all of that. Now, one thing that we have used a little bit to look up other transactions, other blocks, is the search function within this. Now, this is something that you could use, and I'll tell you why you might not want to, but you could look up your Bitcoin address on here. You could look up your transaction ID, but you are using somebody else's node and somebody else's mempool instance on that node. So there is some information that could be kept by that provider of this. So we don't know if mempool space is malicious or not. It's sort of a trust don't verify kind of situation. I would feel incredibly comfortable looking up my own transaction IDs on my own instance of mempool. This keeps it private. This keeps it between just me because it's on my own home network that I'm connecting to this on. So I would be cautious for a digital privacy kind of reasoning to not look up my transaction ID on a public block explorer like this. But you could, or you could just look up other transactions or transactions that maybe you don't care if they're private or not. So I'm actually going to send a transaction right now, and we're going to take a look at the transaction ID, and we're going to look up some things so you can actually see what it looks like when it happens. So this is my Coinos wallet. We got a few donations here, about $15 Canadian in donations when they arrived. Bitcoin's gone down a little bit, and we're going to send this to our own wallet. Now, it's really not very much for UTXO management. You might want to wait for this to accumulate in sort of this custodial wallet that I might have. But for testing sake, I'm going to send this to my Sparrow wallet, and I'm going to consolidate it with all of the other funding we have for pleb tools in a later date in a multisig anyway. So it's going to be a little bit of fees that I'm just seeing here, but this is all just to show you guys how it all works. So I've copied my address. I'm going to paste that into this field here. I'm going to do the max amount that it's going to let me. And we have some ability to change the amount of sats per vbyte. Now this is going to determine how quickly you'll get into a block. Again, if we look at this version of Mempool, if we look at our own version of Mempool, we can fee estimate based on the last few blocks. We don't necessarily need to see the actual full amounts of transactions that are in everybody's mempool to get a clear estimation that there's not much demand for block space right now. So 1 sat per vbyte is going to likely get us in the next block. As we can see, everybody is paying 0 sats per vbyte. So I'm just going to do fast 1 sat per vbyte. It's going to cost me 141 sats in sending the transaction, and there's also a platform fee because this is held in Lightning, so they need to swap it over to on-chain. So let's press send, and we can tap here. Now I actually went into the transaction itself, and there's a transaction ID associated with it. So let's copy this, and again, I'm going to look this up on my own mempool, but I'm also going to look it up on the other instances of the mempool too. Okay, so here we go. This is on mempool.space. We can see you can visually see that it is in the next block as of now. Now this isn't a confirmed block. So if all of a sudden there becomes a huge amount of demand for block space and people are paying 2 sats per vbyte or higher than the 1.01 that I put for my fee rate, then this arrow is actually going to start moving back and towards and potentially get into the next block instead. So it could get pushed out of this block because this block is just being built, and it's just an estimate of what a miner could take in. So you can actually see as blocks come in, they're going to be paying more higher fees, and it's going to push lower fee blocks out and back into the block after it. So a lot of this can change before the next block is actually hit. So let's paste in that ID again. This is the transaction ID here. You can see this is a wallet that Coinos has, and this is sort of similar to what maybe an exchange wallet might look like if you have it on Coinbase or something like that. So there's 0.00997272 Bitcoin in there. This is the Bitcoin that I'm receiving to my receiving wallet address right here. And this is the change address that they're getting back. So this is output 1 and output 2, and then this is the fee, just like that. So we have one pending UTXO, and it is not confirmed yet, but there's $10.62 worth of Bitcoin, USD. So Canadian to USD is the difference there. And it's unconfirmed because it is still waiting in the block. So this is mempool.guide. And again, it's going to be in the same block here, same information. It all looks the same. And here's the transaction in Sparrow as well. And you can just click the transaction ID. This ID is exactly the same. You can see the amount here, the 99,000 sats. You can see this amount is the address with the amount, the fee paid to the miner, and the return address that's going back to the Coinos wallet. So all of this information all lines up. This is the triple ledger accounting basically that we're seeing is I have the same copy of the transaction as Mempool Space, and Mempool Guide also has the same, even though we're all running different mempools, different nodes, but we all have consensus on what a valid transaction is, and we all have consensus on what the Bitcoin blockchain is, and we can see it on any of those, and we are all holding a copy, and we are all agreeing that everything here is valid. This is the transaction ID in my own mempool. We can see it's in that same first block, and all the information is the same. And this is something you could do if you ran your own node, which I have plenty of videos on how to run your own node. And I will link a series on the best possible way to do that, in my opinion, which is with your own mini PC. You can also buy, say, a Start9 or an Umbrel, and I will have links to those as well. 5% off of the Start9. I have a discount for that. No discount, unfortunately, for the Umbrel, but they're both fine machines. It's really just important to run your own node for your own sovereignty type sake and privacy, as we can see here as well. So one other thing that I want to show is a type of transaction which I did not look at in here, and we're going to see if there is any transactions like that. And this is under heuristics. So we looked at a consolidation. You could also look at a batch payment, which is exchanges. Sometimes they'll cover the fees for you. And the reason for that is because they'll wait until they have a lot of outgoing transactions of Bitcoin, and they'll create one transaction with tons of different outputs and wallet addresses that are receiving those, that have requested the Bitcoin from the exchange. By doing that all in one transaction, it becomes data efficient. So a batch transaction is actually a way to cut down on the amount of data that needs to go into the blockchain. So it becomes cheaper for the exchange to do that rather than send out a transaction every single time somebody requests it. Now, oftentimes there is a way for you to get your transaction not in a batch payment, but you have to pay the mining fee. That is part of why there's free options and paid options sometimes with your exchange. So this other heuristic that we want to look at as our last thing that we'll look at is CoinJoin. Now, this is a way to increase your privacy, your digital privacy for your Bitcoin. And essentially one way to describe it is everybody takes their UTXOs, and we all receive same size UTXO on the out as the output, and we receive it to a new Bitcoin address. And because they're all the same, and because they're all through one transaction, nobody can necessarily look at one of those and know that the input matches the output. So one way to create an analogy for that is if we're all standing around, there's 20 people standing around or 10 people standing around a desk, we all put a $20 bill into the middle of the table, and we mix those $20 bills around, and then we all take a $20 bill out. We don't know if we got our own $20 bill or somebody else's. So it creates a ability to create some digital privacy or to de-link yourself from your Bitcoin. So let's take a look at CoinJoin transactions, and there unfortunately was none in that block. We're just going to kind of look for a block that has some CoinJoins in it. So here is a CoinJoin transaction, and you can see it looks really cool. So all the inputs are matching the outputs. And so basically you can have a variety here of inputs, but it'll all get chunked out to the same outputs on the other side. So this would be like a mini coin join within here of everybody receiving 0.02 Bitcoin back, no matter what they put into it. And likewise down here, we can see that happening with all these different amounts. So there's services that do this for you, and it's to create digital, spending, transactional privacy, which we should all be entitled to as individual people. And it's basically what allows for the ability for Bitcoin to act as digital cash, which has its ability to be pseudonymous and have some sort of transactional privacy as well, which is difficult to do in a digital realm, especially at the base layer. There's also additional privacy that can happen on layer 2s and whatnot, but this is a way for people to create privacy on chain for their Bitcoin, and it looks really cool in the flowchart. So that's a full exploration of the Bitcoin block explorer called Mempool. Hopefully you learned something. Hopefully you experienced Bitcoin in a different way that will allow you to hold space in your mind for Bitcoin and create a tangible reality and concept of it for you, which helps you build conviction. That's my hope here, and understanding. So hopefully this helped. If you have any questions, comment them in the comment section below. Again, my name's Forrest Hodel. I'm a Bitcoin educator, and I make all sorts of videos like this. I do live streams twice a week, and I do private sessions. If anybody wants some additional help talking about Bitcoin, you can reach out to me, link in the description. I also have a link for Bitcoin Well, which is a great non-custodial exchange. You sign up for them using my link and you'll actually get free Bitcoin on sign up. Not much of that going around, so take advantage of it. And also 5% off of the Start9 to run your own Bitcoin node, as I talked about, 15% off of the titanium Stampseed kit, and 5% off of privacy phones, graphene phones. And I also have a link to the Cold Card, which is my preferred cold wallet, my hardware wallet. And yeah, basically everything you need as a sovereign Bitcoiner is linked in the description with some sort of bonus or discount link. So thanks for checking that out. Thanks everybody. We'll see you on the next episode of Bitcoin, Not Crypto.